Howdy, Jacob here. Today we're looking at CoreCivic in the commercial services and supplies industry. 1.5 billion market cap, almost a billion greater in enterprise value. Founded in 1983 out of Brentwood, Tennessee. Okay, interesting. They operate partnership correctional detention and residential reentry facilities in the United States. Okay, growth has been pretty lackluster. Not a whole lot of growth. 1.6 billion in revenue in 2014 to 1.9 billion in 2023. Looking at about a 1 to 3% compound annual growth rate with a declining gross and declining operating margin. I don't like that at all. That might be enough to put me off, but we'll still dig more into it. 122 million cash on hand, 12 million short-term debt, a billion long-term debt. That $1 billion in relation to free cash flow is generously 5 years. So if they were to produce 200 million in free cash flow, it's about 5 years of that. But it looks like they have reduced debt pretty substantially over the last 5 years, 4 years, because it was as high as almost 2 billion. So at least we know that they are willing to pay it down, but I do want them to pay it down into a 2 to 3 year range, which would make me more comfortable, or nothing, either or. But their other use of cash is share repurchases, and they used to make some acquisitions, used to pay a dividend, but now they don't. All right, so this will be interesting. Let's start making some assumptions here. So on the revenue growth side, probably looking at like 3%, because this is assuming maybe 5 to 10% acquisition, since we're not really seeing anything in reinvestment. Margins, I mean, the margins have gotten hit pretty bad, but free cash flow still looks pretty decent. So maybe they just get their earnings back and they're able to get more consistent on the earnings side. But free cash flow has been pretty consistent, so I do like that. I do prefer that. Share repurchases, 1% for them is about 15 million. Top set stock-based compensation, about 37 million. So 37 million to them is not a lot. So I think they are able to buy back 1% of shares. PE at the end of 7 years, where even their enterprise value will still probably be a bit higher than their market cap. I think I'm fine giving them a 12 PE maybe. Again, it's very subjective, but to me, I'm balancing out their growth at the end of 7 years with their enterprise value. And I'm assuming in my assumptions 5 to 10% to acquisition and reinvestment, maybe 20% to share repurchases, and a lot of money going towards debt reduction. And with these assumptions, that's my conservative estimations. I think it needs to fall 44%, or it needs to fall 44% to get to the return I'm looking for here. So not terribly, horrendously far off, but for me, business isn't something I want to jump into immediately. So I'm going to wait my time till it gets to a obviously attractive price. Hope you enjoyed the video. Thanks.